my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A gapping lower open yesterday, since filled in with market punching down through not only the light Fibonacci congestion at 71.91 and 72.87, but also through the rising long moving average, currently 72.88, closing just below it. This was actually a more than suitable follow-on lower to the previous session's immediate countering key reversal down and bearish engulfing pattern. However, though it seems the market has done much, prices still did not approach the pair of significant 50% Fibonacci levels that are below at 71.85 and 71.80, and therefore the July 2021 to February 2022 move and the very recent March to April move respectively. This failure to approach was much like last week's failure to close below these same two 50% Fibonacci lines, despite three daily attempts in 1 week. Not what you would like to see if you were a bear. So we look overhead to see what is up there, and we have a wealth of congested moving averages, consisting of the flatlining medium moving average, currently at 74.15, the flatlining short medium moving average, currently 73.87, and even the falling short moving average, currently 73.90. So far today, well, a higher opening bullish above the stomach pattern and bullish opening white Maribozo that saw prices punch up through all three moving averages, the short medium, and the medium, though it has not been by that much. It seems to trying to push up through all these. It seems actually all this trying to push up through these moving averages has also managed to erode the bullish incentive. This time, well, at least for a little bit. German DAX futures. A lower but still indecisive doji cross yesterday as the market's descent from the previous session's combined bearish engulfing pattern and outside day was immediately questioned as to whether it was a good idea. Prices did manage to drop down and out of the mess of supports between 14.079 and 13.804, including the February 2020 low at 13.821 and the 50% Fibonacci line of the October 2020 to November 2021 move at 13.804. However, most notably, prices did not close below the February 2020 low nor the 50% Fibonacci line. I suspect this is a key point in any plans for the downside, which the market has seemingly fouled at. Thus, looking above, we have still the neckline of the December 2021 to February 2022 head and shoulders top, currently at 14.071, and the upper trend line, currently 14.140 of the late March to date descending expanding wedge pattern, which is paralleling the upper tine, currently 14.296 of the January to late March bearish shift pitchfork. Now, so far today, a much higher open, well within the congestion zone between 14.079 and 13.804, and a strong move higher out of this zone and over the head and shoulders neckline and up to test the upper trend line of the late March to date descending expanding wedge pattern, where it has currently halted, or rather tested and seeing if it can break through higher, but not managing it just yet. US E-mini S&P futures. A lower but still indecisive spinning top yesterday. However, the move was still very significant, because if you had any doubts about how much technical analysis is used in this market, well, here is an absolute example of TA at work. You see, yesterday was significant for two reasons. The first was something I pointed out yesterday itself. We had a time crossover of the lower tine, currently 39.12, of the bearish shift pitchfork, and the middle tine, currently at 39.04 of the bearish Andrews pitchfork, both for the same period, the January to March move, and that happened yesterday. I had highlighted this important time with a red circle in my previous day's commentary, and also drawn another red circle for the next crossover. That's assuming that both pitchforks will be operational, and that's of the upper tine of the bearish Andrews, currently 42.88, and the middle tine of the bearish shift pitchfork, currently 42.15. And that's actually in a few days' time on the 7th of June. Hence, I renew my warning and what to look for. This crossover is also circled in red. Now, these will only become redundant if one or both of these pitchforks are retired. The reason why TA is being used here is more immediate. It is yesterday's low of 39.56. Why would you make a low yesterday just one full point above last week's action and then end up with an indecisive pattern higher up? Unless you were looking to make sure, at least for yesterday, that you would not set up the conditions for a weekly key reversal. You see, if prices had dipped down to the 39.55 level or lower and then moved up, you'd have set up the conditions for this week to be a weekly key reversal. But since we haven't, then we still have not set up the conditions for such a pattern so far. It will now all depend on where we go today, especially if we approach that 39.56 to 39.55 level. Finally, a word about crossovers, time crossovers. So, I've previously warned about time crossovers in various markets, and this market is a case in point. You see, when we've seen times crossover, such as these yesterday, you should look out for one or more of the following to occur on the day or very soon thereafter: volatility, a change in trend, or a reinforcement of a trend. Hence my caution. Once again, you can see the time crossover circled in red. Yesterday's one and the one in early June. Now, so far today, a slightly higher open and move higher away from the time crossover and the congestion at 39.02 and 39.11, but not as yet testing the next obstacle above. Well, that's the February 2021 high at 39.59. Just keep a watchful eye out in case we see an attempt today at a weekly key reversal. So that's down to 39.55 or lower. Just keep an eye out for that. Thank you for listening. This week, this short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights AD Tofpik and ADM Investors International Limited. And here comes the final bit.